this region, there was no apparent order block for 5 minutes. So for 5 minutes, I'm going to leave it at that. So what whatever is happening can start with.
Good morning, traders. I hope you had a good week. We've had a lot of news this week. We've had a lot of activities that have occurred, and today is still a hot day because we have NFP data coming out, and I think we'll go through everything and see what we can do. Good morning. So if you can hear me, you can just say hi in the comment section. At least also lets me know guys are around while we start today's market snapshot session. So in this session, we'll be talking about what has happened this week. The US, Japan, Bank of England. So there's a lot of news that has come out this week that I think will guide us on what is going to happen next week. Hi, Matilda, J Squad TV, Joseph Kisharu. Hey guys, Max. So let's start with what happened earlier this week, and we'll talk about Fitch. So I'm on the chart for NASDAQ. When you're looking at NASDAQ, obviously you can look at either S&P 500, Dow Jones, usually correlated. So before we go to this chart, let's see what happened earlier this week, especially with Fitch. So let me go back to different. Yeah, so earlier this week, Fitch downgraded the US, and in terms of the overall country risk profile. So the US usually rated AA. I think it was only Moody's and Fitch that gave US the highest possible risk rating or credit rating, which was AAA. But earlier in the week, Fitch downgraded the US to A+, to AA+, which is a slightly lower tier than the AAA rating. So now we have S&P and Fitch both thinking that the US is slightly riskier, and they gave a couple of reasons for this. Number one was erosion of governance. So there were so many reasons they gave. Let me just zoom this one out. Just a minute.
Because I want to see a full value break.
Yeah, sorry about that. I think it was loading. Okay, so they gave a couple of reasons for the downgrade. Number one was erosion of governance, rising government deficits, and I know as Kenyans we can relate. We have the general government debt on the rise. So these were the reasons that Fitch made conclusion to slightly downgrade US in terms of the credit rating, but the reaction in the market was quite mixed. So if we look at the chart for, let's start with the bonds. So ideally, if you have a country with a higher risk profile, then debt investors will ask more from the government bonds. That means that the US treasuries will, for investors to invest in US treasuries, you need slightly a higher rate of return. But if you look at, for example, this is a chart of a US government bond 2-year yields. This is a daily chart. We didn't see the price or the yields increasing as much. Yeah. So you can fairly argue that the Fitch rating in some way didn't really change the market perception, especially the bond market. And this was some report with also, I think, Al Jazeera, was it Reuters? Oh yeah, it's Al Jazeera. They're saying how debt is a beacon. Let me read this. Let me just quote this. Debt is America's golden goose. Fitch can't kill it. And that, you get a sense of that from the bond reaction, from the bond market reaction. But if you look on the stocks, on the stock side of things, the stock markets, so let me share my screen. If you look at the stocks, the reaction was quite different. We had this move downwards finally. So remember, just a minute. Yeah, so if you look at the stock markets, the story was quite different. We had this sharp drop finally because we've been having an upward trend for like the longest, and it seemed like stocks were just going higher and higher. But finally, we had this push downwards. You can see it on the daily chart and on the 4-hour chart. It seems as though the trend somewhat wants to change, but we'll see how today's news is going to impact this. While I also answer the question from Nderitu. Yeah, so I've marked this area here where there was a gap in the market as a potential target should the news favor an upside move in NASDAQ today. So there's an area to watch out for because of that market gap. Of course, price usually tends to get drawn back to gaps. And if we have fundamentals supporting it, then this is probably a very interesting area or target to watch out for. So that was the first thing that happened. The Fitch rating affected stocks a bit, didn't affect the bonds market. So far, I think that the impact of that rating has just faded away finally. So what else happened earlier in the week? So you're just recapping what happened before we go to what you're looking at for today and going forward next week. So the next thing that happened was the Bank of Japan. Yeah. So they had a meeting this week and there was some shift in sentiment. I don't know why this one is so huge. There appeared to be a shift in the sentiment with regards to yield curve control. So remember, Japan is one of the countries with the highest amount of debt, and their monetary policy usually revolves around their debt. And we call that yield curve control. So they're trying to control the yields on their debts, either by actively buying bonds or actively selling bonds. So when you actively buy bonds in the market, you're creating demand that is reducing the yield and hence making the debt cheaper, things like that. So they've been doing this for the longest, but remember, when a government buys bonds into the market, they're effectively releasing cash into the economy. And that's why for the longest period, if you look at USD JPY, let me go back to this chart before we go to this article. If you look at USD JPY on the daily chart, if I zoom out, you see that for years, because of this reason, they've been buying a lot of bonds, trying to keep the cost of debt relatively manageable. And that has weakened the Japanese yen over time. And earlier this week, there seemed to be a shift in that sentiment. Should we really continue with a yield curve control? And that's what this article is talking about here. So if you come back to this article, quite a number of sentiments that are really surprising. So the first one is,
those equal highs
let's see. There's some quotes here. So yen moves. Okay, let me just zoom this one in like that. So yen moves have been and will remain a very important factor shaping Japan's monetary policy. So now they are starting to focus more on other things in the market rather than just their debt. And one of them is the price of the yen. The BOJ made that point clear this time in a way unseen in the past. Yeah, remember earlier this year, the Bank of Japan intervened in the market when they saw that the yen was too weak. And let me just show you that. The last time the Bank of Japan intervened was here at the top. So there's a time they came out and they decided they're intervening in this market. Just a minute. Yeah, here. So we had this push, this aggressive push downwards when they first came out and said we're going to intervene in the market, and it led to slight strength in the market. That means they started actively buying Japanese yen to prop up demand, and it's something they've done also in the past when when the yen. This was the first time they intervened, I think, in 2 years, past 2 years or so over here. So this sharp drop here was another intervention from the Bank of Japan. Yeah. So they're just propping up the currency so that it doesn't really become too weak. That means anytime traders are looking to trade Japanese yen and we get to this 145 region, you'll start being skeptical about whether prices are going to continue going higher. So that's one thing to watch out for. And the conclusion is for USD JPY, there is a very limited upside. The room for it to go higher is very small, considering that there is that potential of the Bank of Japan coming into the market and intervening and making the USD JPY trend lower. So that's one thing to watch out for. And it explains what has happened this week. If you look at, for example, the 4-hour chart, if you look, for example, at the 4-hour chart, we've just been oscillating at this point. However, if you look at other pairs like GBP USD, AUD USD, the dollar has been clearly strengthening. So that's one thing that the market is cautious about. And having said that, if our NFP data today comes in and it doesn't favor the dollar, probably this is going to be the best item to look for shorting opportunities against the dollar, because of that sentiment that there's still some bullish sentiment on Japanese yen. And if it mixes up with bearish sentiment on US dollar, then we could see potentially us getting to new lows or breaking this trend and starting a downtrend. So that's one thing you need to watch out for. Let's go back to our second screen. So we'll talk about all these items and then I'll come back to the questions. So just keep the questions coming in the chat section and then continue there. So most of this article is just that they're starting to worry about inflation overshooting and YCC probably needing to come to an end and things like that. And that might provide some strength in the Japanese yen. So going towards next week, that's one thing to watch out for. Okay, so let's see the main central bank, which is the Fed, and what's happening here. Okay, so there's a question about Fitch. There was a question about Fitch price, whether Fitch or NFP, which one is important. Obviously, NFP is more important. Remember in last week's meeting, what they said, they had this, I don't know where that is in this article. So last week they basically pegged everything on how the data is going to be. And remember, we have 8 weeks until the next 4MC. So we have like 2 NFPs, 2 CPIs. Is it 4 or 2? To go through. I think it's two for each. So that means NFP and CPI are ever going to be more important data points going forward. And that's why we can explain the consolidation in the markets, the better part of yesterday and today. They're really going to be huge moves in the market because the Fed basically is pegging everything on these 2 data points, and more specifically, employment and inflation. So if you go through this article, okay, some things here like sovereign debt downgrade hasn't really affected the market that much, so you won't really look at this. But markets enter today's NFP release pricing with a very little chance of any further hikes here. So if you look at your calendar, so just let's go to the calendar. The expectation is there wouldn't be such a huge difference between, where is it? Yeah, so the previous data point was here, 209,000 jobs, and the expectation is 205,000 jobs. So it's not really a big difference. And remember, the Fed doesn't just look at individual data points, it looks at the overall trend. So one thing you need to note is if we have something close to this, it's probably still going to be in line with the Fed or the market thinking that we might not have more hikes. The only time I'd expect us to have probably a big sustained impact is when the actual reading is significantly different from this. Something maybe with a difference of at least 100,000 positive or negative. So if it's within 200,000, I really don't expect a lot. Okay, maybe short-term high impact, but after that, it shouldn't be sustained because the Fed is looking at the overall picture in the economy and the general trend in the market. So there is this one and there is average hourly earnings. Both are very important. Usually people just focus on non-farm and ignore average hourly earnings. So think of it this way: before an economy before companies start hiring new people into the farm, they usually just extend the hours of the current employees. Yeah. So this is a leading indicator into where the economy is heading. It's a more effective indicator than just employment, because firms will start by increasing work hours and increasing the pay before they start increasing the number of employees. So take both data points as equally important, and don't just focus on non-farm employment alone when you're looking at the surprises or the readings that come out later for the day. And we'll talk about what a positive and a negative reading will mean for the charts in a few minutes. So back to our article. Yeah. Okay. Just a minute. So early in the week, we had ADP figures coming out, and we saw a downwards move in the dollar. So let's just look at that in the charts first before we continue. So if I go to H1, yeah, so ADP was when? ADP was 2 days ago, or yes, was it on Wednesday? It should be on Wednesday. Yeah, so the thing is, ADP came in, just a minute. Just a minute. Yeah, ADP came in on Wednesday and it was positive, but look at the reaction in the Japanese yen. It was very muted because of what we've discussed earlier with expectations in the market. But when you look at all these other currencies, you find that the reaction was very different. We had pound coming down, we had Australian dollar coming down, and this was a very good trade this week. We'll talk about the Bank of Australia, Reserve Bank of Australia decision earlier. And then if you look at USD CAD and Euro USD, basically we had very strong moves Let me do the daily.
This is a premium shown.
Okay, I'll just have to clean this chart. Just a minute. Okay, I think that's a bit cleaner. So we've had this general downtrend. And if you look at the weekly chart for the week, so this is 1, 2, 3, 4, 5, 6, 7. So this is movement for this entire week from here to here. Yeah, 7 days. And we've generally been in a downtrend because of a stronger dollar. Yeah, so the thinking is, if we go back to chart. Yeah, okay. So the thinking is because the Fed is pegging everything on the next 2, 3 releases, we're going to have very huge reactions in the market, obviously. So, yeah. So, number one is the expectation that the market, in the market, that we might have a slightly lower employment reading, and average hourly earnings are going to have increased slightly lower. Yeah, by slightly lower. This is going to be, in theory, this is supposed to make the dollar weaker, because if employment is reducing or is growing at a slower pace, then the Fed should be concerned about it and probably not increase interest rates, and that's going to have a weaker dollar effect. But if you open this here,
so I'm not going to get into
you can see, like, for example, the previous expectation, between the previous and the forecast, it was quite huge. But if you look at today's previous and forecast, they're almost the same. And that explains the market consolidation you're seeing both in gold and in euro and most of these pairs. So we'll just hop over to the charts for those two, and then we see what you need to be looking at. So we go back to this screen and we can start with gold. So
it didn't give me any reason to enter the market.
Okay. So just a minute. Okay, so this is this has been gold for this week. We've had this downwards trend because of both ADP and the fact that on Monday, was it Monday or Tuesday, we had some news from Australia where they decided to hold rates, and this really affected both the Australian dollar and gold. So we're seeing a general change in trend, lower, and at the moment we are at a consolidation. Yeah. So one thing to note is we have an area here to watch out for, and I'll highlight this gap here still being relevant, but we'll have this for now here. Just a minute. Okay. Yeah, so generally we've had a downtrend, and gold hasn't really retraced from Tuesday, the better part of the week. So if at all we see employment coming in line with expectations, then we might finally have that reprieve of our retracement, because from Monday we've just been going lower and lower. So if non-farm comes in probably at 205, sorry, higher, if non-farm comes in higher than 205, maybe 300 or 400, then that will give us a reason for a pullback, because we've not had a pullback in the longest. However, if we get even, just a minute. Just a minute. Oh yeah. Okay. Just a minute. Yeah. So if non-farm comes in line with expectations, that is, if we get something close to 205 or something slightly lower, mind you, gold has been trending down, downwards very strongly. So this will give us some reason to see a slightly weaker dollar, and that might lift gold. So if we get a bit weaker data, then that's going to give us a reason for a proper pullback in gold. So if you go back to this chart here for gold, this move that has happened the entire week from here to here, at the moment you're consolidating here, this is 4-hour chart, a justification for a pullback into either this region or slightly higher will be that. But I don't think it's going to shift the sentiment as much unless it's really low, unless employment comes in like super low. But if it's slightly lower, then yeah, we'll get a pullback, and then probably things will just go back to being the same. So that's one thing to note about. You're not only looking at the difference between the actual and the expected, you're also looking at how big that difference is and how will that lead into what the Fed is thinking. So that's number one. So now I think I can start getting to the questions. Yeah, so we can also look at Euro USD and do the same analysis. So this has been the move. Okay. Okay. Just before we get into this chart, I think it's important. Yeah, before we get into this chart, let's just look at fundamentals for Euro, just before we get into this chart, because it's also going to mainly dictate the dollar index. Okay, so with the Euro, there's nothing much happening this time because okay, fundamental wise, euros here they're saying Euro USD moves will entirely be determined by US jobs data. Any more swings in treasury yields. So for this now, I think we are going to entirely depend on what happens with NFP. So I think if the Euro data is muted like that, then we'll just have to rely entirely on NFP to make our judgment for what is going to happen today. So back to our charts, we've been going lower. So I can just mark a few zones before we continue with where we think. So one thing when I'm marking support and resistances is that I prefer to use line charts because it simplifies the work for you. So you can always use a line chart and then go back to a regular chart. So this looking like this, again, if we see data coming in slightly or weaker, then our play will be looking for justifications to go higher. So I'd wait, for example, for prices. Obviously, if the data comes in weaker, we're going to check this one out. But I can see on the chart that we have things like gaps here. We have one fair value gap there. And we have that order block over here. I think I'll change the color of this here. So we have this gap over here or an imbalance, and then we have this order block over here. So chances are, if we see a lower employment reading, then chances are we can look to see how the market gets up to this point. However, if we have a stronger reading, then now we'll be looking to take new lows in the Euro. So first off, we have a level here. And if you go back to the daily time frame, I can see that we started buying at this point here. So this is going to potentially be my first target, and it's quite big. So we'll have to narrow this down on H4. So I'll just mark this out. The last bearish candle, before an up move is basically where you mark your your demands on. So we have this. I think we can narrow it down slightly on the for our time frame. Yeah, so it's way down here. Over here. Yeah, so that's basically what you're looking to see. So if the reading comes in positive, then that means it's higher than expected, then this trend should continue going lower. And if we get the alternative where it's slightly less or lower, significantly lower, then we'll be looking to see how we're going to hit these zones over here. So again, because there's nothing much happening in the Eurozone at this moment, we're entirely depending on the US data for our prospects. Same thing with gold. Yeah. Probably we first look to check out this high over here if you have weak data. And if the alternative is the case, then it's a very huge zone. So you have to reduce this. Yeah. Yeah. So if it's the alternative, then I want to see how we're going to get into this region here. But I think you can narrow this down using the 30 minutes and the 15 minutes so that you get a slightly smaller range, a more accurate estimate of where we need to go. Okay, so that's that with this XAU USD and Euro USD. But there's one more thing that people fail to prepare for when it comes to non-farm. Just a minute. And I'll emphasize this on the calendar. When you're looking at non-farm, you also need to look at the hourly earnings. I think I'll repeat that one more time. There's a scenario, or there are days where this will be higher and then this will be lower. That usually really messes up a lot of people's setups because now there is this confusion, and that's when you get maybe the market going opposite. There are times when this will take precedence. Average hourly earnings will take precedence over employment. So when there's a mixed reading for these two, if you're really not confident with your analysis, it will be better to stay out of the market. But if the most obvious times is when both of these have aligned. Again, remember that employment change is slightly lagging. Hourly earnings are more accurate when it comes to the state of the economy because a firm will increase work hours and salaries before they hire new people in case there is more demand in the firm. So it's a leading indicator because firms do that first before hiring more people. So usually if both are aligned, then it's a good thing. So it's easier to interpret the markets. But if it's just mixed, then you need to be careful with how you interpret the employment data there. Okay. So let's go back to this screen. So we've looked at Euro XAU USD, you've looked at Euro USD. You've looked at USD JPY. You said that for Japanese yen, just a minute. We've said that for Japanese yen, things are looking bullish in the Japan side of things. So if we see a scenario where the dollar is strong, I don't think this is a good pair to go for longs because of that increasing possibility of intervention. Yeah. So you need to be careful with this. So in the event of a strong dollar, pick other currencies, but not the Japanese yen. In the event of a weaker dollar, then this will be the best one because it's going to coincide also with the strength in the Japanese yen. So that's one thing to look at. GBP USD, I think I had so many things on this chart. So I'll just remove this. I'll remove these arrows. Okay, so we're looking at this order block here, which was hit on the 4-hour time frame. So I'm just marking out potential targets that you can use when you're doing your analysis. on where pound is going to head in the event of a stronger dollar. At least we've explained what we mean by, or what is likely going to cause a stronger dollar and vice versa. Okay, so this hot order block was hit, I think yesterday when you did the analysis in the session, and we had this bounce off. So it's going to be validated again if our analysis comes in and the dollar is indeed weak because of a lower reading. But at the moment, we'll just probably see it moving within this range. So we wouldn't look much into it. Okay, so I think having said that, we can look at, one more thing is AUD USD. On Monday, they came up and decided to hold interest rates instead of hiking them, and that really caused things to tumble. I think this one also affected gold here. So gold and AUD USD, Tuesday was just something because you kept dropping here because of that decision. And then on Wednesday, ADP came out and it just continued lower. And then now you're just consolidating, waiting for NFP. So in this case, this is also like AUD USD JPY. This is the opposite of USD JPY. In this case, because you know Australian dollar is supposed to be weaker, a strong US dollar is going to really have a bigger impact on this because we know fundamentally AUD is supposed to be weaker. So if you combine a very weak currency and a very strong currency fundamentally, then you can get a very good trend to work with. Okay. So the same can be said for USD CAD. Yeah, we are approaching this area over here on the daily, so it's good to watch. Again, if you want to draw support and resistance, sometimes just use a line chart and it's going to save you a lot of time in knowing exactly where to have your zones like that. And then just go back to your candlesticks. Yeah. Yeah, so this one looks like a very interesting pair to see if you can check out these imbalances going lower. So again, when you're doing your analysis today, know which currency to pair a strong dollar with and know which currency to pair a weak dollar with. Don't just go for any currency for the sake of it when you're trying to get the best results from your trading. So this one looks like it will make a very good short should the dollar come in weak because of all these imbalances. And then we have our area here to watch out for. Probably put this here. Yeah. Okay, so let's go through the questions and see what else I've missed. So we've talked about Fitch, NFP. So the Fitch announcement wasn't really important per se. It affected the Nasdaq. This down move over here. And if we have weaker data, you might see us go back up. Why weaker data? If it's weaker data, then low interest rates are good for stocks. So you might see us going back up here. That means if NFP, the actual announcement comes in lower than expected. Yeah, this is a good area to check out this imbalance over here. Okay, what else are we seeing? US oil. I think we'll look into that. Gold, we've had a look. Analysis gold and any factory trade. I think we'll talk about oil in a minute. US government dismissed the Fitch analysis report. Yeah, I've not really read that. Or it looks like it was political. Yeah, it could be the case that it was political because the Fitch is in the UK. They're telling the US how bad it is. So I don't know. How does the Bank of Australia holding rates affect gold? So there's a huge correlation between when there's high impact news on in Australia, there's a huge correlation between AUD and XAU and XAU. So there's normally a huge correlation. I think Australia exports gold or iron and metals. So that creates a huge correlation between this and this. That's why on Tuesday, which was a very bad day to be long on either Australian dollar or gold, can see that on Tuesday here, gold dropped without retracing, and it only gapped midnight. It had this small gap. I think I should zoom this. Yeah, so gold just dropped from Tuesday midnight, because usually you have it going in swings, but it just dropped, retraced a bit, and then ADP came and it dropped again. Yeah. So there's usually a correlation between the two, mainly because of its commodities from Australia. Yes, any other question? Fed has two roles, price stability and full employment. Inflation is now heading to target, hasn't fully. So with that, they've not yet decided. If you watch the meetings of the last minute with regards to the Fed, they hadn't decided that, okay, we are going to, it's usually called forward guidance. They tell you what they're going to do the next meeting, or where what they're likely going to do. But they just picked everything on employment and the data coming out, and it just threw forward guidance out of the window. So we don't really know, because they said the next two data points are going to determine whether they're going to keep on hiking or pause. So, but the market at the moment is pricing that they might probably pause. But let's see how that goes. I see if above is true, is the XY. So I'll just look at Euro USD and then invert that for the XY, because it's mainly just Euro USD inverted. Okay, so we've had this downwards trend for like 2-3 weeks with Euro. That means Euro has been under pressure. So if the current state of affairs continue, and a big likelihood or a big explanation will be if employment comes in line with expectations, then we might see us going lower as normal. Because remember, the previous reading was 209, the current reading is 205. So if it comes in as 205, then it's still a drop in employment, and we might still see us going lower. Yeah, so this is 205. Let me see. Oh, sorry. If it comes in, sorry about that. It's a bit confusing. So if it comes in line with expectation, that is a drop, then you might see Euro USD retracing back a bit, because ADP really isn't the actual NFP. It's just a different firm doing the analysis. So if we see really strong data today, then this trend is going to continue going lower. So expect that we should hit here, if not today, maybe next week. Okay. Trading JPY is an extreme spot. BOJ actions twice a week can really, yeah, that's true. So the problem with USD JPY is the Bank of Japan can just come in anytime and decide to also be a trader. So when you're trading with the Bank of Japan, it's not really a good idea, because they can print or buy a lot of Japanese yen to either prop up demand or cause supply. But one thing, the flip side of this is, as long as you're following their sentiments, like what you've talked about here, as long as you're following what their sentiment is, and we've really discussed that over here, their thoughts and thought process, that they're worried about inflation and things like that. It's giving you an idea that they want the Japanese yen to be strong now. They are a bit done with the whole YCC yield curve control thing. So at least you know, if the Bank of Japan was to intervene, which direction they'd want to take the market. That's one thing for sure. Yeah, Aussie is that's what I was trying to remember. Australia is the second largest producer of gold, and hence Australian dollar is very correlated with gold. And that's why on Tuesday, that move was really huge. Okay, so going into next week, let's go back to this. Oh yeah, we're in this chart, the screen. Going into next week, we're still not yet off the hook in terms of volatility in the market, because we still have more data. So there's a huge likelihood, and here traders need to plan for all scenarios. There's a huge likelihood that the reading will come as expected. Yeah, I know people are preparing for extremes if it comes in too high or too low, but if it comes in as expected, just know that the market will react as though that is bad news for the dollar, because employment is overall heading lower. So next week we have one key data point is China inflation. Yeah, remember China is heavily tied with Australia because of that relationship, economic relationship. So this one you can try and see what happens on AUD USD. And then we have inflation on Thursday, which we'll also be looking at to see where it's going to go. But clearly right now the focus is on NFP. So we'll just have to go back to the screen. So the focus right now is let's just wait and see what is going to happen here. Because if we had a clear understanding of the expectations, for example, if we had a clear understanding of we expect employment rate to be significantly higher, then the dollar will already be strong. We'll already be seeing an uptrend in the dollar. But that's not the case. The expectation is very close to the previous announcement. So the expectation is we are at 205, the previous was 209. So it tells me people are not really sure. And that's why we have consolidation, because we are waiting for it. There are those days when it's clear that everyone is expecting a higher NFP or a significantly lower NFP. That's a different case. Okay, let's look at US oil. We have US oil. US oil. Oil has been very inactive. Oh, the other thing is because expectations are not so far from the previous, then it's a good day to trade a range, to be a reversal trader way up to until before the announcement. You can always just, yesterday and today were good days if you're doing range trading, because you're not, the thinking is the market isn't really going anywhere because no one is sure the extent of the announcement. Okay, let's look at oil. I know oil usually at this point, there is a range that it's been trading at, a lower bound range and an upper bound range. Yeah, I think this is the range for oil. Yeah. So oil has been in a somewhat of a range for the whole of this year. So these are the key levels for oil, 82 and 64. Yeah. If you go to the lower time frame, daily, okay, now at least we know where the range is. So if you go back to, let's see if we can have any fundamentals for oil. So you can, if you want, XPT is what is, that's a cryptocurrency, yeah? Is that Ripple? Okay. So while you're waiting for that one to be clear, let's look at oil. Just a minute. Okay. Okay, so this one thing when you're reading these articles, make sure you have an article that is up to date so that you don't read old news. So this was updated 15 minutes ago. Okay, I think the story here is we know where global demand is heading to. With that Fitch downgrade, we are saying that things are going to be tough later on. That means global demand and manufacturing and everything is going to be down. And I think that's why these oil producing countries are really trying to manage the price from it trending lower. But now the question is, how effective are these cuts, or how sustained are these cuts going to be, considering demand for oil is falling anyways? So because of global economies slowing down. So having said that, if we come back to this chart for oil, you need to ask yourself, are they fighting a losing battle in terms of, yes, they're cutting supply so that prices go up, but how far can they sustain this? And that means we might see a limited upside with oil. So I shouldn't expect oil, if it breaks above this, I shouldn't expect it to, just zoom out here. What was the previous one? Yeah. I shouldn't expect oil to go all the way even past 90, unless they do something dramatic again. But it seems like these guys are fighting a losing battle, because at the end of the day, what drives prices is global demand. When you try and artificially control these prices, the impact is usually not very sustained. So I'll be careful in trying to look for longs in oil, and I'd want to see whether you're going to have effective opportunities to return back to being a seller in the market. So that's one thing I'd watch out for with oil. Platinum. That's a very interesting asset to trade. Is it platinum or palladium? Do you have platinum? Or is it palladium? Just a minute. My computer is kind of slow today. It's platinum. Okay. So when it comes to, I haven't really looked at platinum, unless there's someone doing effective analysis. Maybe you can reach out to me so that we can do the analysis on platinum together, but it's not an asset I've really been following on. So that's the much I can say about platinum. Unless maybe you can, on Twitter, my handle is Samson Mzera. You can just reach out and then we'll talk about platinum after I've done some research. I usually prefer doing assets where there's a solid understanding of the fundamentals, and then now you can look at the technicals afterwards. So having said that, key takeaways for the day is, number one, Japanese yen looking very strong, will probably be a good one to pair with a weak dollar. AUD USD looking very weak, will probably be a good one to pair. Sorry, Japanese yen this one will be very ideal when you pair it with a weak dollar, and AUD USD, because it's looking very weak, will be very ideal to pair it with a strong dollar. Yeah, those are the key takeaways. Having said that, enjoy your trading day today. Let's see how this event comes out. I think for the consolidation, we should expect this to continue for today. So it's been consolidating, like for gold, we've been consolidating since yesterday. If you're trading reversals, it's a good thing. I'm sure there are guys who are trying to buy yesterday and getting stopped out with these weeks. So be careful when you're trying to place do your risk management today. And of course, just do your analysis before making a decision to enter the market. Having said that, thanks for attending. Last week I wasn't around, but I think took you through the sessions. Next week we'll be back here to see how this NFP news went down, and then we'll see what to expect. But next week is also packed with CPI, and that should drive some volatility for us going forward. Okay, let me say that. Enjoy the rest of your day and have a happy hunting day.